Hi, I'm Patu from freefincal, and in this video, let's talk about if investors should exit HDFC Mid-Cap Opportunities Fund or if new investors should not consider it or whatever. Is it good enough to be considered for by new investors? So the reason why I'm making this video is many investors are worried about the recent performance in this fund. Is it just linked to the overall slump in mid caps, or is the fund management not doing a good job? So the template I'm going to talk about in this video can be used by viewers for any fund. If you can get the full details in my review, the link is in the description. So let's take a look at this. So I have done a detailed review of this fund, the long-term performance, 3 years, 4 years, 5 years, 10 years, and so on in November 2018. The link is within the main article link. You can have a look at that. I'm not going to look at long-term performance. I'm just going to look at short-term performance. The fund is benchmarked to Nifty Midcap 100 Total Returns Index. And if you look at the I'm just going to look at few 1 month, 2 month, 1 year, 2 year, and so on. For less than 1 year period, the returns are absolute, just the percentage change, and 1 year and above, it is annualized. So let's take a look at this and pay particular attention to whenever the index fund gave a negative return. Sorry, the index, the Nifty Midcap 100 index gave a negative return. So over 1 month, the index minus 0.9%, the fund 0.54, 3 months 1.38, fund is 1.22%. 6 months minus 2.19, fund is minus 2.08, 9 months minus 4.2%, the index minus 2.79, the fund, 2 months, 2 months is not so important, 4 months is not so important, let me go skip all past that. 7 months is minus 4% for the Nifty 100, and the fund HDFC Midcap just fell by minus 2.54%. And most significantly, over the last year, the Nifty 100, Nifty Midcap 100 fell by minus 3.25%, but the fund has gained 1.77%, which is very impressive. And over last 2 years, the index fell by minus 9%. That's a significant fall, whereas the fund only fell by minus 5%. So that's very good. Every time the index has given a negative return, the fund has always given a lesser negative return. And that's a very good hallmark of a consistent performer. Excuse me, let me get rid of this. That's a hallmark of a very good consistent performer. I don't see anything wrong with it. Next, we shall look at the upside and downside capture ratio. So by upside, I mean that whenever, so we look at monthly returns, and whenever the index is given a positive monthly return, we look at the fund's return, and we find out how much of the index gain has the fund captured. That's called the up capture ratio. Higher the up capture ratio, the better. And there is a corresponding down capture ratio. We look at the fund returns only when the index is given a negative return, and we find out how much of the index losses has the fund captured. So the up capture ratio should be as high as possible, and the down capture ratio should be as low as possible. Because it's losses, it should be low, gains should be high. Typically speaking, a very good long-term consistent performer will have a low downside capture ratio of 80% or so, 85%. So it will only capture 85 to 90%, 80 to 90% of the index losses. And the up capture will also be 80 to 90%. It will only capture 80 to 90% of the index's gains. This looks counterintuitive, but that is the source of alpha. Outperformance comes by not performing better than the index when the index is moving up, but by performing better than the index when the index is falling down. And this is also seen in the case of HDFC Midcap. We should look at typical durations here. Just show you that. So this is between December 2017 to December 2019. Last 2 years, the up capture is 82%, down capture is 80%, which is good. Last 3 years, between December 2016 to December 2019, up capture is 90%, which is decent. Down capture is 79 or 80%, which is like only 80% of the index losses it has captured. Again, from December 2016 to December 2017, the up capture is 83% and the down capture is an awesome 55%. December 2017 to December 2018, the up capture is 82% and the down capture is 78% and so on. There are other numbers which you can see. And the last one, which is in the last year between December 2018 to December 2019, the up capture is 81%, which means that the fund has only captured 81% of the index losses, and the fund has also only captured 74% of the index's gains. Of course, the index has not gained much, which is very, very, very good. So I think that's excellent performance. There's no reason for anybody to claim that HDFC Midcap Opportunities is not performing. There's no reason for existing investors to worry. Even new investors who are mature enough can hold this fund as long as they have the right expectations about the fund. So, to the title question, should I exit the fund? If you are investing for the right time frame and with the right asset allocation, I've talked about this in previous videos, then you can remain invested as long as you have the right expectations. This fund will work over the long term, either for existing investors or also for new investors. One concern that many people have is the fund has got 22,792 crores as on November 30th, 2019. This is the fifth largest for an actively managed fund in the entire Indian mutual fund space. But there is no indication whatsoever that the fund is performing badly because of the large AUM. I think it's all right. One argument Kumar Roy had made in Asana Days of Wealth is, if there is a large there is a liquidity crisis because of a crash and so on, how will this fund perform? Because each stock will have a huge exposure in terms of actual money and so on. Well, that's something we have to wait and watch. We can't comment on this, but we'll have to see how it goes. But I still think AUM is not a problem for this fund, at least at the time of making this video. So there's no problem with HDFC Midcap. Stick with the fund, and I'll catch you again later in another video. Bye-bye.